Good morning, everyone. Welcome to Prebell with William O'Neill India team. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, the disclaimer for this presentation is that whatever stocks we discuss in this presentation or podcast are intended only for educational purpose, should not be taken as an investment advice. Here is the Nifty's daily chart taken from our website, MarketSmith India. Understanding Nifty's price volume action gives an overview of current market status, and will also try to give only perspective by looking at various parameters here. If you observe recently, after budget announcement, that is on the February 1st, this big candle, Nifty moved in the budget days range for the last 2 weeks. Recently, it has broken out on the higher end yesterday and previous session. Until then, it was trading in a very narrow range and it was trading in the budget range. So there was no decisive action on the budget front. Investors are not able to take it as a positive or negative way. So there is no clear direction after budget announcement. Normally, what we will see after budget announcement is if the investors are liking the budget, Nifty or all the general market will rally after budget announcement. Or if the announcements are not in favor of market participants, then market will definitely fall after budget. But in the recent budget, nothing sort of which happened which made the investors rejoice or cry upon. That is the reason most of the for the last 2 weeks Nifty traded in a very narrow range and in the budget range. Recently, the yesterday's session and the day before yesterday's session, Nifty reclaimed its 100 DMA, which is a historically a very good support for the Nifty index. In the yesterday's session, during the intraday, Nifty reclaimed its 50 DMA as well, but on the closing basis in the last 30 minutes, because of averaging effect, Nifty closed slightly 4-5 points below its 50 DMA. It's not a major sell-off, but closing above 50 DMA is significantly a very positive sign. So that is the reason we have turned on the buy switch and we have started adding stocks to our model portfolio as well. Yesterday we have added 3 stocks to our model portfolio as well. There are a lot of queries as well regarding why stocks were added despite being in rally attempt and Nifty not giving a follow through day. It's a very reasonable question and we should answer from our team as well. That is rally attempt is that signifies that Nifty is attempting a rally. That is the reason we say Nifty is in a rally attempt. And follow through day is a signal that rally attempt is successful and Nifty is in confirmed uptrend and a confirmed uptrend or in rally. But when the market is in rally attempt, there are few stocks which will be definitely outperforming the market, which will be breaking out of the base patterns, which are fundamentally strong stocks and technically they are giving buy points. If you look at broader market indices as well, they are doing very good and they are giving good strength-wise. They are looking very good. That is the reason. And Nifty reclaiming its moving averages is also a positive sign. So that is the reason we have started adding stocks to model portfolio. If we continue to wait till follow through day, we might miss out on the rally from which will happen from here, which might happen here. So that is the reason we wanted to be beforehand. We wanted to catch up a few stocks which are early in breakout and which are outperforming the general market. Some of the key companies which are in news and which will be under radar in the today's trading session are Ultratech Cement, which is a major cement manufacturer in the country, has announced the commissioning of 2 projects. One is brownfield cement capacity expansion in Chhattisgarh. Another one is a 2.8 MTPA capacity of greenfield expansion in Odisha. With these 2 announcements, commissioning of these 2 plants, the current capacity of this cement manufacturing company is at 127 MTPA. Railtel, another company related to Indian Railways, received work orders from Bangalore Metro. Work order is around 27 crores of rupees. This is to supply installed testing of various IT network infrastructure related works. Apart from this, the company also received an annual maintenance contract from the Bangalore Metro. This is worth of 6.2 crores per year for the first 5 years, and there is a clause in the order. It can be extended up to 10 years as well. So these two companies will definitely be under radar today. Both are on the positive side. Sagar Cements has received an approval from NCLT board to acquire Andhra Cements for a worth of 922 crores. Again, these two stocks will also be under radar today. Coming to institutional activity yesterday, both the foreign institutions and domestic institutions have taken good positions in the Indian market yesterday. They have bought nearly 1,570 crores of equities, both FIS and DIS. A positive sign, FIS if the FIs are net buying on Indian market, definitely a positive sign for the Indian market. Recently, foreign institutional investors have been selling off in the Indian markets for the last couple of months. If they become net buyers on month-on-month basis, definitely a positive sign. Fresh inflows coming to the market will definitely take Nifty higher going forward. Overnight, US market closed pretty lower, more than 1.2, 1.3, 1.4% lower. Dow Jones with 0.3% decline, Nasdaq with the highest decline of 0.8%. Asian markets are also trading with a negative bias. If you see Kospi and Nikkei are trading nearly 0.7% lower, whereas Shanghai is trading flat with a slight positive bias. SGX Nifty is no different. Yesterday Nifty closed at 18,035 level, slightly above 18,000 level. So we might expect opening below 18,000 level. So it mostly a flat opening on the index, but the bias is on the negative side because of US market closing more than 1% lower and Asian markets trading on the negative territory. Definitely the overall global bias is negative. So we might expect a negative bias in the Indian market as well in the today's trading session. For the chart of the day, we picked Polycab India. This stock is included in our model portfolio by watch list also. The stock has broken out recently from its cup with a handle and currently trading slightly above its ideal buy range. On the time of breakout, the stock had a very good volume. This is what this time period. But recently, when the stock came down and tried to rally higher, the volume is lacking. Apart from this, other ratings wise, everything from the company side looking very good. If you look at the EPS of 95 indicates a significant, very strong fundamental company. Price strength is slightly lower because of this lower volume and stock not being able to rally after breaking out. ABD rating is pretty decent at A. This is because most of the red candles are below average and blue candles are above average, signifying accumulation happening in the stock. So ratings wise, the stock is looking very good. Another key parameter, that is number of funds. The stock has been able to garner new fresh funds on each quarter. Last 4 quarters, we have seen a significant addition of number of funds invested in the company. Again, a very positive sign. So on volume front and fundamental technical front, the stock is looking very good. And that is the reason we have added this to our buy watch list. If you have this stock in your portfolio, definitely you can continue to hold it and you can keep stop loss depending on your buy price. 20 DMA will be the short-term moving average, which will be keenly tracked. This can be kept as a stop loss going forward. Thanks for joining today's pre-bell. Have a very good trading session.